Hello everyone, welcome back to another Liquid FX video. Here we're going to be going over the NQ or the Nasdaq 100 E-mini futures. And here we start on the 4-hour time frame. We're going to be dissecting how you could have got involved in some potential scalp trades. So I don't personally trade the NQ. I'm looking to transfer into futures soon. But here's an overview as to how you can use ICT concepts, how you can use ICT in the NQ market, right? So let's have a look. So what we're going to be going over is we're going to understand that we had an all-time high that was printed over here. So this is our previous all-time high up here, ATH all-time high. So what we're going to be looking at is we're going to be looking at how price traded above the all-time high just over here. So how you could get involved in the potential sell trade and how you can ride the overall higher time frame momentum, which is of course very much bullish. So let's head down to the 15-minute time frame, which is one of my entry time frames, to see how you could have got involved in potential scalps. Okay, so first we're going to start off with the sell trade, right? We're going to start off with our sell trade. So let's see. So on Friday, the 23rd of February, we had price that rallied up, giving the initial all-time high at that point. So this was our initial all-time high up here, right? ATH all-time high, the initial all-time high. Now, since then, we had a break, we had a chalk. So we had an M15 chalk, and this is very simply how you'd mark it up. This would be our initial change of character over here. So just a few things to identify a change of character. We're looking for a body break. So I look for a body break when I look for my chalks, and I want price to follow through. So essentially, I want price to break with a body, essentially, is what I'm saying, right? So this is our M15 chalk, okay? So from here, what we need to do is we need to understand that price has given us a chalk, right? As price has traded down, we've come up and we've had a minor retracement, and then we've headed down again. So what this represents is a chalk followed by a confirmed chalk, otherwise known as a boss. Okay, so we've had a chalk and we've had a boss. So we understand that supply has taken over demand, right? We see supply in control after the all-time high has been printed. Great. Okay, now that we go down to the now that we stay on the 50-minute time frame, actually, we need to understand what do we look for in price in this leg over here, right? So when it comes to potential entries, what we're looking for is an AMD model. So just to recap people, just to refresh their models, we're looking for an Asian range. We're looking for price to trade above the Asian range, and then give us our break of structure, right? Our chalk or our boss, and we're looking to enter off a fair value gap. So we're looking for an entry in this region over here. So we have price trading in the Asian range. We have price creating a Judah swing. So the Judah swing is typically the yellow box I always use. And we have an internal chalk over here marked out with this line. Okay. So now that we have these things, what we do is we look to enter here. We look to enter off the fair value gap in either the New York AM session or the New York PM session. So that being said, let's identify how you could have got involved in a potential sell trade. So we need to understand we have a fair value gap over here. So if I zoom into price, price action presented itself with a fair value gap over here. So it's important to understand that we have our shift of market structure. So we have a market structure shift, MSS. We've had a break of structure to confirm that MSS. Now we have a fair value gap. But what's very unique about this fair value gap is the fact that it is at 19 o'clock UK time, which corresponds to 2 p.m. Eastern Standard Time. So what's important with this time? This is one of the major ICT trading sessions where fair value gaps are of a higher probability. So this is very important. You need to pair time with all of your analysis because it's time and then price, right? So if I'm going to write that in a more responsible way, I'm actually going to label this the PM session fair value gap. The PM session, the New York PM session fair value gap, right? So with that being said, we have an order block in this region, right? This then becomes our order block over here. An order block is something that breaks structure and leaves that timed fair value gap, which is what we're looking for as traders to enter, right? So this is our OB, right? This is our bearish OB. So with that being said, we have a bearish OB, so where therefore this then becomes a valid entry. So the question now becomes, where's your entry, where's your stop loss, and where do you target? Good question. Okay, this is something we're going to go over now. So you'd want to have your entry, sorry, just below the order block, just below the order block over here, so you get tagged, so you get filled, right? So I would have my stop loss just above this wick over here. sorry, not stop loss, entry just above the wick over here, where would you keep your stop loss? Where's a safe place to keep your stop loss? I would keep the stop loss just above this wick over here. You don't want to have it too close to the OB because then you could get wicked out. Have your stop loss in an area that allows price to breathe, right? So you want price to maybe trickle around near your entry, then it eventually takes off, right? So you want to have space to breathe. Let your trades breathe, right? Let your trade breathe. Very, very important to understand. Let your trade breathe, right? So that being said, let's see how we could have got involved, right? So our order block over here was respected. Look at how price behaves at the order block. Price is very reluctant to leave the order block. We see price wicking above it, right? We see price wicking above it. So that's our first trade over here, right? Using the simple rules of an order block. Price did hang around. It's very choppy trade this, but if you were to take this trade as a scalp, a potential scalp, you would want to have your stop loss just below the order block, like we said. OB just above the wicks, the New York wicks, keeping your OB above the New York wicks. New wicks. A little bit of squeaky bum time, but we stayed in the trade. And where do you target? That's the next thing. Where do you, as an analyst, look to get out, right? Because it's as a trader, you don't want your emotions to take over your analysis. So where do you want to get out? Very simply, the low of the day. You target that London low or that Frankfurt low. So this is the pre-London low, or simply just the London low for short, right? This is the London low. Target London liquidity in the New York session. Boom, right? 1 to 2.4 hour trade, right? 2.4 hour trade. So this is a quick scalp on NAS or the NQ or NASDAQ. They can all be traded. If you can trade one, you can trade all of them. So this is one very good example of how you can potentially get involved in a NQ short, let's say, right? This is one example. Okay, so now let's go to a long trade, which was also valid that fit the criteria. Same thing over here, but it's going to be flipped on its head. So just to go over the schematic of price, we have an Asian range that accumulates price. This is the accumulation of the market. In this particular market, we had a two-step manipulation. So we saw price manipulate the Asian high before heading lower. So what we saw over here was very simply an Asian range. This is the Asian range. Now, the Asian range accumulates price. It's an accumulation that builds buy side and sell side liquidity. The London session or the pre-London session over here to the left of your screen sweeps buy side liquidity here in yellow. This is the manipulation phase 1, right? So MP1 is manipulation phase 1. Now, as price tears lower after the first manipulation, what we see over here is price giving us the second manipulation before breaking structure to the upside. So what does this second yellow box represent, right? What does this represent in the market? Now, this represents the ICT Judas swing or the turtle soup, or very simply the manipulation in the AMD, right? So this is the Judas swing. Now, the Judas swing represents a manipulative piece of price action that aims to sweep those early buyers out of the market and entice sellers. Now, as we can see, those sellers get absolutely swamped as price heads up higher, right? But how can we as traders get involved in this market? That's the thing to understand. So now that we've had a shift of market structure, right? So this is our shift of market structure, right? Market structure shift, MSS. So the MSS represents a break of structure to the upside. So now what we're looking for anywhere in this sort of region over here. So this region marked out in blue, what are we looking for? Begins with the F. It's a fair value gap in price. So we're looking for price to give a fair value gap, FVG or fair value gap. And what we look to do as traders is enter off the fair value gap and then trade price higher. So we're looking for price to get down into this sort of region over here. A safe stop loss will be near that Judas swing, and we target a 1 to 2 or 1 to 3 hour trade, right? 1 to 2, typically 1 to 2.5 is what I look for in trades, right? And that's exactly what played out on this day. So if I just take you to price again, we begin to identify a fair value gap just over here that gets formed at 3 p.m. UK time, which is 10 a.m. Eastern. So this is 10 a.m. Eastern. So this is the AM New York session, right? New York. This is the AM New York session. So how could you have got involved in the trade? Again, fair value gap, target the fair value gap, or enter off the fair value gap. You want to have your stop loss below. It doesn't have to be as low as the Judas swing, but you need to look, where are the imbalances? Where are the imbalances in price? A safe stop loss will be just below this wick over here because there's no imbalances in this region. And the question then becomes, where do you target? 1 to 2 or 1 to 3 hour trade is what you target. Typically 1 to 2, I think this trade is at the moment. Yep. 1 to 2, 1 to 2.2. Great trade using the simple AMD schematic model, right? So this gives you a very basic overview of how you can trade NQ or NASDAQ or even SPY or ES in these types of markets using ICT concepts.